When markets move, Stephen E. Orr takes the chair. From the White House to Wall Street, he's spent decades at the intersection of policy, markets, and real capital. And he's seen firsthand how institutions use data behind closed doors. Now, as founder of Quasar Markets, his mission is to pull those signals into the open so everyone can see what really moves the markets. This is Stephen E. Orr, BigBeat on Wall Street. Let's filter the future live.
Good morning, Quasar Markets Live. Another day, and I feel like we're a soap opera. We're not a financial news network right now here, Steve.
World War III is loading.
So
name me
now,
the last time that we took a tanker over in the middle of the ocean.
I don't know. And with Russian subs are racing to defend it.
Never happened.
Yeah. And this news, as Trump last night said, Venezuela would turn over 30 million to 50 million barrels to the U.S. The crude will be sold at market and proceeds will be controlled by the U.S.
What market? U.S. market? Venezuelan market? Russian market?
World markets. No non-sanctioned world sales to the West.
Petrodollar. It doesn't matter. We're still the petrodollar. It's still in denomination of the dollar. Is the Russians going to take that? This is bigger than people think it is. This is huge. And I don't normally say that. This is huge, Howard. If you look at it from, and of course I have the background in this, right? This is huge. This has never happened before. And when you look at it from the perspective of history, this is probably bigger than the last starts of all the world wars. No, it can't be. Well, we didn't kill it. We didn't kill a former leader, I guess, or the king of Spain. So okay, we didn't do that. We've actually openly taken a tanker of another country and seized it. One that quote Trump calls a friend, Putin. Is it Venezuelan? Is it Russian? It's changed names twice now. The Marinera, the Bella. What is it? I'm not really sure. This is a big deal. This is really a big deal. And I look at WTI under $57 a barrel. That's a lot of oil coming on the market. That's good. But it's not good. This is really, 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 really bad. But
shouldn't this be causing downward pressure? Would be logical if the barrels are effectively rerouted and monetized into Western channels.
Yeah, I mean the thing is that Venezuela's PDVSA, the big oil company down there, really can't do much. They're sanctioned. They can't really pull the barrels up. There is one company, obviously, a U.S. company down there, Chevron, but they don't have the refineries. So you got to bring it back somewhere that has a refinery. And guess what I said earlier?
Well, remember, I said this yesterday. My conspiracy theory is playing out.
I think
Valero.
I hate conspiracy theories, and I think you're right, Howard. I really do. I think you're right on this one. Valero
closed down a heavy crude refinery at the end of December in California at the behest of Newsom and the lefties there. And I think Trump's going to get it reopened because that's an easy answer.
Well, the question mark has to be the cost. And look, the cost of oil is not just transportation, pulling it up out of the ground, the workers. It's also about moving it around in the pipelines, right? And so there's not a heavy pipeline from the Gulf straight to California to bring it back, right? So it's why the refineries are in Texas and in Louisiana, because there's not much transmission lines.
Hey, we take over the tankers, we've got plenty of boats to bring it over on.
Right. So Trump,
this crazy. I feel it's like right out of a movie. This is
right out of a movie. And here's what's interesting, and people aren't talking about this. Trump's biggest play in his first administration was to get the Keystone Pipeline back up and running. And I said that's the dumbest thing ever, which I was right, still am right, still stupid right, completely right. Why? Because we're not pumping that much that oil out of Keystone. We don't need it going from the Canada down to the basin, right? So we need to go in. If you want to divert that oil, it needs to go towards if you want to send to California, we need oil out of the other side of the world. It comes through the ports in Los Angeles, which is the third largest port, right? The largest port being Elizabeth, New Jersey, a second largest being in the Gulf, and the third being in Los Angeles. But for oil, I should say. But that's a big deal. This is huge. I don't think people understand. This is freaking huge. And when Stephen Miller was asked about it this morning, he said, "Damn right, we took over Venezuela, and we're going after Greenland next. We don't even need to go. They only have 30,000 people. We're going after that next." So,
And don't forget Panama.
Panama.
We want the canal back.
Oh, we already have it back, right? I mean, that's pretty much what's happening right now. I mean, we're almost there now. I was just there in the Panama Canal not too long ago, and China is definitely in the Panama Canal. There's Chinese ships literally everywhere in the canal. Like I love oil. This is one of my biggest things that I trade, and I have oil wells, so I understand it. So let's think about that. I mean, this is a massive problem. And I don't know if it's good or bad. I can't tell you that. I can't tell you if he made a good decision or a bad decision. He's going to say it's a great decision. Oil companies are going to say, "Oh, yay, look, more money." But then name me that Venezuela has gone back and forth so many times, and coups, it's crazy. So unless we are actually going to position troops there, boots on the ground, as we say, I don't know, man. This could be.
We're gonna take the oil, we're gonna sell it, and we're not gonna give them the money unless we like the regime in power.
Well, yeah, starting at 50 million barrels.
That's what they said today. That was this morning's release.
I think there's some laws around. Look, the United States, the Supreme Court said we cannot adjudicate the president while he's in office, but the World Court can, and The Hague is not playing around. And I'll tell you one thing else, that European leaders got together the other day and did something they'd never done before, and they made a very direct threat. United States, if you go after Greenland, we will intervene. UN will intervene, as well as European forces will intervene. That is not normal. We have great relationships with Europe, and all of a sudden, I'm beginning to wonder myself about our relationship with the world now. We can't isolate ourselves anymore. So this is getting very interesting.
Yeah, and and the week just keeps on going. On Friday, we should get our Supreme Court decision on tariffs.
Yep.
Due Friday. Market has priced in the fact, or at least Polymarket is pricing in that they're gonna declare them illegal. Do you think the Polymarket and Kalshi have it right?
Good question. The Supreme Court's it's one-sided right now. But Roberts has really not voted with Trump for a while now, and I think that's why he's found out that his own Supreme Court isn't voting for him anymore. He's finding out members of Congress are leaving. Right now, the House of Representatives, the member has passed away on the Republican side. It's getting very close, and I don't think anybody in Washington thinks that the Republicans are going to keep the House, including the Speaker, including the President. Already said this. He's worried about getting impeached again. So, I mean, MTG has left, right? We've got other members that are getting very worried, and they're not voting for the president. He's actually lost 8 votes now on the Republican side. It's getting very worrisome for him over there. So I don't know, Howard. I have to think about this one a little bit more lengthier. Yeah, he might lose this vote, but it's not about losing the vote to him. It's about losing the vote to the United States. What does it mean for tariffs in the future? Man, this is a very interesting, and this is a very interesting time that we live in, and this is history being made in front of us. So, I would tell people to be very careful, which is why we've seen gold and silver and commodities run up so fast over the last few weeks. Now, yesterday I said that I would have wished I had, and I wish I'd done it. It was shorting silver because I thought the silver run was nuts. ZSL is up 11% right now, but and I'm feeling stupid about that. Yeah, it's all over. It's all over CNBC right now. It's all over the news. Like, this is a big deal. This is not this. You can downplay it all we want, but this is not normal.
Yeah, when they broke it live, and they broke it, the news about the oil.
Mexican President Steinbaum just says her country is not sending more oil to Venezuela than it has historically. So this is not just a U.S. thing anymore. This is becoming a world. The world's paying attention right now.
Yeah. Yeah, I mean, this is yeah, no one. Hey, I got good news. Did you see that Alaska Airlines just bought a bunch of Boeing planes? Has Boeing moving up really nicely today? One of the early market movers for us there.
Yep.
So you got some good news there, up about 1.36%. So that's strong news for us. Steve, we got to talk a little bit, big news besides taking over a foreign country is that, the consumer and electronics show, which you would not think is the place, but it really is the chip, like that's their Super Bowl.
Oh yes, it totally is. Yes.
You know, it's funny because to me, when I think consumer, entertainment, I think of like the Xbox guys and the Unity guys all hanging out. But no, it's Jensen Huang. He's saying China demand for the H200 is very high. Production restarted and export license details are being finalized. On the side of Micron, UBS turns the screws higher with a big price target hiked to an AI-driven memory cycle narrative. Steve, the AI bid remains intact, but the question is now geopolitical gating. What does this do to those orders for NVIDIA? What does it do for the chips?
Straight up. I mean, look, when you look at the CES in Vegas, you have to think about, look, when I'm asked all the time, if we had an event, where would it be held at? New York, Miami, where should we? It's Vegas, right? Because Vegas is outside of having huge convention centers, which the Vegas Convention Center is huge, having these big places, there's things to do, right? There's clubs, there's obviously gaming. We know that gambling. We know that there's
for it. They're just
right. There's everything to do. So what happens is that these big events become a destination. So wives go, families go, all that becomes a spectacle, right? The Bitcoin conference is a great example that I go every year. So they're not just going to hear Jensen Huang speak at the event. They're going to all the parties afterwards. They're making deals. They're saying, "Hey, look, hey, if China's back in, what can I do in my country? Hey, what can I do for me?" Right? That is the most well-attended electronics show in the world. Yeah. And so when we talk about that, they're not cutting deals just at the show and seeing what they have. They're talking about the next level. And they're going out and having drinks and enjoying life and saying, "Hey, you know what? I want to cut a deal with NVIDIA because NVIDIA is in, and I like what I saw." Right. So this is really good. And when Jensen Huang giving the keynote speech and talking about China has changed the tune of a lot of people there that were nervous about NVIDIA chipsets. And of course, AI. And we've heard that over the last 2 months. AI is dead. People are unhappy. AI is being spent so much money. It's crazy how much money. There it is. Yep, there it is.
I had to laugh at this one. So yeah, hey, now that we're going to get the price down as low as we possibly can, because we've, now we'll refill the SPR.
He's not wrong. He's absolutely right.
Yeah, hey, listen, you want to buy it when it's inexpensive, and we know you haven't been reloading. So
he's back. Right, 1%. Yeah.
Yeah. So now it's time. Yeah. I mean, it's a soap opera today for sure. Soap opera for sure.
But the question you have to ask yourself with all the news breaking as fast as it is right now is how is this affecting the markets? And I'm not seeing it affecting the markets, to be honest with you.
It's not even moving. I mean, the NASDAQ isn't. It's not even moving it.
No, the VIX is up 2%. With this kind of news, why is the market not reacting a normal, shall we say, a normal way that it would have 10, 20 years ago? Because I think the algos don't really understand it. And I think the high frequency traders are taking the algos offline because they're not really sure. And when people talk about a black swan event, they're not just one event. I mean, if you were to tell me in 1985 that Reagan was going to attack a foreign country's leader, take the leader, well, he did. Manuel Noriega in Panama, right? But didn't take any of the assets. He took Manuel right out of the compound and brought him back into justice, right? We've had other leaders, and some of them actually have gone to Gitmo, Guantanamo Bay in Cuba. We know that. But this is a different situation. This is a step further than we've ever gone before. And this could literally be the beginning of something we think bigger. Steve Flanagan says because the market is not taking the bait and reacting in negative fashion. I don't see. This is not the bait. This is actually happening. This isn't actually some headline that coulda, woulda, shoulda. This is actually happening, right? These are declarations of war. I mean, we just took the leader of a foreign country. That's not normal. I mean, I had to read the Geneva Convention.
Hey, Polymarket said it wasn't even an invasion. They won't pay out. That
I don't run my life by what Polymarket and Kalshi says, right? As much as I love Polymarket and Kalshi, I don't invest because of Polymarket and Kalshi. Okay, but they're putting their money to where their mouth is. So I kind of understand where Steve is saying. Yeah, and Zora's saying, yeah, that she's also interested in that the market doesn't seem affected by this crazy news too. It's crazy news, folks. This is not normal. Yeah. This is not what happens.
And to be honest with you, the VIX is unmoved. It's actually gone down since the news came out.
Yeah,
just so you know, I mean, it's up versus yesterday, but it had moved up in the pre-market. You know, in between 3:30 in the morning, and it maxed out around 6:30. So yeah, I mean. It's just blowing everything.
I will say there is something.
I mean, the market's saying it doesn't think it's as bad as you do, and this is all rhetoric from both sides.
It's bad. I think. Let me tell you what I really think about.
I know you think it's bad. I do, but I'm saying the market.
Bad. I think it was how it's handled was bad, but I don't know that overall it's bad. I'll tell you one thing I do think. It did show the might of the United States military.
Oh yeah, I mean, I was watching what's his name, the founder of Palantir, Losman, this morning, and he made it clear, you know, China's, you know, their radars failed pretty miserably on this, and that's a big deal. So they might not be feeling so comfortable right now. You know, that is without a doubt, you know, Palantir. And I'm laughing because it hasn't had Palantir stock up like it should be. I mean, they executed flawlessly. You know,
I agree.
It's down 67 basis points today. Yeah, I mean, it's, you know, and he made it clear the stuff they're working on is just, you know, light years ahead of what everybody thinks is being worked on when it comes to defense and, you know, the whole nine yards.
Polymarket now says Trump will acquire Greenland before 2027. I mean, literally right now there's a 15% chance. I mean, you know,
the fact there's even a chance is crazy. What's the chance? Look up China taking over Taiwan. I think that was like 17 also.
I pretty much want to just stick my head in the sand for a little while on this one. I mean, it's just.
Let's get back into stuff that we, you know, actually looks pretty good. So ADP came out with their numbers. It was a soft but positive print.
Softer number, yeah.
You know, 41,000 private payrolls versus 48,000 expected. Slightly under consensus. The gains were concentrated in services, weakness in manufacturing, and information professional buckets. You know, it's not getting worse. It's just not re-accelerating maybe. What did you take out of the numbers? Are you just waiting for non-farm payrolls to come out? I like ADP numbers because I think they're not skewed. There's no political.
You know, as a long-term trader, we didn't really look at ADP numbers. They kind of gave us an indication, but we didn't really rely on ADP numbers because it really didn't give you real numbers. Because some people got laid off and then they didn't go sign up for unemployment. We looked at U6 for that number, right? They were soft. You know, I mean, this is a seasonal time for the Christmas time and holiday time, and it was seasonal. I don't know. This is not good. I don't think it's good news, but
okay. Let me get some charts up here because there are some good things to look at today. I mean, there's a lot of things going on. Staying in the area there, Valero is one that I pointed out yesterday would be a beneficiary in this game. They're breaking to an all-time high. Interesting here, 185.59. Steve, you looking to short any of these oil and gas names as we get closer to the open today?
I'm not touching oil and gas with a 100,000-foot pole. Okay. I mean, I don't know where this is going to go. If you're investing in oil and gas, it's because you're doing it long-term right now. If you're doing it because you think you understand oil and gas, let me tell you, I've been trading oil and gas for 35 years, and I don't really understand what's going on right now. So I would be very careful. Anybody trading oil and gas right now, trading it as a daily trade. I'm sorry, I shouldn't get that right. If you're looking to, maybe hedge and do all those things, then I totally understand that. But just to invest, no, I don't think so. No, that's silly.
Couple of things I'm watching today. Costco trying to break through its 50-day SMA, one that Steve and I are both bullish on. If it makes that move above 8.95, could be something to watch today. A lot of the names you like are at key inflection points here. So Costco, you think we make that run? I think it does. I think it starts to break through the 50 and we look for a nice run.
Scared me yesterday when Costco and CRISPR, of course, my other one that I like, that's way up. This already, I don't know how much even up this month already. Look, they're starting to be attracted now to Main Street, and I saw yesterday where even Jim Cramer's liking Costco. Oh God, the kiss of death to my stocks. Thanks. I don't know. Costco's, my thesis hasn't changed. Costco's a great company. People are going to it. So that's the difference, right? I don't care what the chart says to me right now. I care what people are doing. They're buying more and more and more. They're not, and look, if the world gets nervous again, they're going to stock up on toilet paper again. So, and they're going to go to Costco and buy toilet paper. So I would not do it. I would go against Costco.
Yeah, I was going to say, yeah, you the opposite, right? Yes.
Yeah,
Nike, another one of the ones you are a fan of here, trying to break through its 200-day MA. Is it finally coming out of the doldrums? Is this a turnaround? Is this a viable turnaround on Nike at this point?
People are still buying Nike shoes, and I like the last one, the DK8s. I have one, the DN8s. I have a pair. I like them a lot. I wear flip flops or no shoes if I can help it. But the truth of the matter is, Nike has really got their own game going on with their own. They're kind of still being on Zappos, a little bit with Amazon, but anything new is not going on Amazon. It's on their own. You have to go through them, and that saves in the middleman costs. So I do like their distribution is really good. They have a very good distribution, and they have a very good media team. So those things are always sign up to be something bigger than we always think, and they're looking for the next best athlete to promote themselves. So yeah, I like Nike. I still like Nike. I think it's a long-term play. People still wear them.
Yep. And another one you had called out recently, Lululemon. Again, another one trying to break through the 200-day MA. So retail coming back into sector, a little bit of a sector that is catching a little bit of a bid here. Are you a buyer of retail, or you think you're fading this run?
Well, Lululemon is now in my long-term portfolio. As you know, I bought it a few weeks ago, and that's one I not a lot in there, but enough, and I liked it. Put it in there, and I'm done with it, and I'll probably hold it for a while now. I like the fact that the old CEO, the one that made Lululemon the way that it is coming back. There's a good chance of coming back on this new board vote, so I like that. Now, you asked me about that, Howard. It's I'm still long my Tesla from yesterday. I did not sell. Got nervous yesterday, not gonna lie. I got very, very nervous. Looked at it, but I stayed with it. Tesla's selling yesterday was absolutely nonsense. So that's the one that I actually still have in my trading portfolio. They're about the only one today.
Okay. There are some other things, some other movers this morning. We do see, again, Mobileye Global, we talked about yesterday, was a pumper. It is gapped to the upside again today. It looks like it wants to run. They are the big winner, it looks like, when it comes to the style of autonomous driving. You like a breakout here still?
On
Mobileye?
Oh, Mobileye. Yeah. The LiDAR is the issue, right? I mean, how they actually use autonomous vehicles. Look, you can make the best product in the world, but it's all about execution, right? You got to be able to execute. And I think the only one is right now can execute on autonomous driving as well as electric cars, as has been proven over and over again, is Elon Musk. So,
well, the autonomous driving part, Waymo is much further ahead than Tesla.
I would say Zoox is even further ahead of Waymo, but not in the aspect of people with the name brand, right? When you look at people don't really acknowledge Waymo as a Google product, right? It's Waymo. They look at Waymo. Oh, well, who makes Waymo? I don't know. That's the kind of thing, right? So that's why I'm saying brand here is a bigger situation. So I don't think that. I mean, There's going to be a lot. Every car eventually is going to be autonomous. Every car in the world will be autonomous eventually, right? We all know that. Every car in the world will. The DMV is doomed. I don't know about it now, but thank God, right? I think everybody be happy about that. But autonomous driving is going to how we're going to get around in the world 20 years from now. We'll look back and go, people stuck a key in the ignition, you pushed a button, you had a steering wheel. What? Right? They're going back at us like we were Stone Age time, right? And that's what I'm saying. I don't think that I think the only one can really handle that media side of it, which is Elon Musk. The energy side of it, Elon Musk, right? He's got the whole thing around it.
My view, don't fade the Musk. And I would say that I also, again, the gentleman from Palantir there talked about that. That's why.
Okay, Russia has now claimed, the Russian Foreign Ministry has said, Russia claims the Marinera as our vessel.
Yeah, I don't know. Hanging somebody over the side of the boat and painting a flag, I don't know if that gives them sovereign right. But I mean,
it doesn't matter, right? It matters if the foreign minister says that this is our boat, that just changed the tune. It doesn't matter who they painted or colored it or waved smoke signals in the air. That's if the government themselves says theirs, then that's a declaration of war. I get it, Steve. I get it. I get it, Steve. I understand. But do we really want to go to war with Russia? Do we really want to go to war with the BRICS? Because the BRICS have come together now. Now you're not talking about you're talking about China now too. Brazil, Russia. I mean, India. This is bigger than we think it is. This isn't something, and I think this rah-rah-ree, we're America, it's a different. This is a different world we're living in right now.
We are 1 minute from the open here, so we want to be ready for it. Tick is pretty muted here going into it. Advanced decline only up about 700 and change, 760 it looks like. So no real direction there. We mentioned the VIX, while up about 2%, still very subdued at 15 here. And we'll see what we get. S&P set its first new record high yesterday. What do we get today as we open up? Steve, do you have a price target on the downside for silver here? Trading now at 76.83.
Somewhere around 56. Let's see it pull back to there first, and then I'll tell you. But right now it's
okay. Markets are open here. Advanced decline didn't really move much. Jumped up to 1,000. Tick slightly negative. Nasdaq first move to the upside slightly here. S&P same thing. We'll see if that holds up. That very light. We do see on the Mag 7 mega caps, Amazon and Meta giving up a little bit of their here on the opened. Tesla up about 30 basis points. No real up. There goes Netflix starting to run a little bit, Steve. We didn't mention it in the pre-market. Warner Brothers Discovery, their bid again has been rejected by the board at Warner Brothers Discovery. So this time it seems to be good news for Netflix. Last time it was bad news, right?
Yeah. So we're pushing up. Tesla's pushing up in the pre-market now, getting slammed here in the cash market, which means retail is doing this, right? It means to me that that retail is trying to get out. I'm not sure. It's interesting on that one.
Crypto getting hit a little bit here. Again, that 94 is still the key resistance to watch on Bitcoin. We didn't break any of that market structure, so we are.
Yeah, I mean, I sold. Everybody knows I sold on the Bitcoin that I bought 88. I sold it. We'll be buying back soon, I think. If it gets back below 90 here again, I'll do it again.
Yep.
Rinse and repeat. No.
Mobileye continuing to move to the upside, up 14.2%. The other early morning risers are not really running. Early morning laggards were the space sector with the ASTS, Rocket Lab, both down this morning in the pre-market. They are seeing a little bit of a buyback here. Other names that were weak this morning were most of the mining names. Newmont down about 3.66%, continuing to sell off into the cash market. Same thing, Freeport McMoran. They're seeing a little bit of buying here at this level, but down 2.5%.
I mean, it's kind of a quiet day, to be honest with you.
I think people are trying to digest what's going on. Steve, the other one to keep an eye on is MSTR here, with the news that
so here's an
MSCI is going to.
So we're hearing now that the United Kingdom RAF planes are involved in the U.S. Special Forces operation to seize the Russian oil tankers. So British planes were used in this.
So yeah, that's what I mean. Is it's not all. Like I said, it's not.
I'm telling you, folks, you don't think it. I think World War III has started.
Like,
yeah, I've said it. I don't know how. We don't know how it will play out. We don't know if it's boots in the ground, is it taking over foreign countries, but this is something bigger than we think it is. I mean, the talk of foreign countries like Greenland, right? I mean, it's getting serious. You know, the guy that wants a Nobel Peace Prize, by the
way. Yeah, what are you gonna do, man?
Well, I think we're going to find out very quickly in November of next year, very quickly what's going to happen.
Bitcoin bouncing back from the lows there, trying to hold above 91.50 here, but again, I'm expecting it to come. The key area to watch is 90,900. That was the key resistance for a few weeks. Does that become some support here, or do we fall back down through it? That's what I'll be watching for today. A little bit of a pullback here on Mobileye.
What is it? Wednesday?
Today is Wednesday. Valero towards highs of the day, 186. There it goes. Valero breaking out, up 4.5% here. So Valero making a nice little run.
Yeah, Valero could really benefit from all of this, to be honest with you.
Right. I mean, that if they just reopen that refinery. I mean,
ConocoPhillips could also, CNC. I mean, there's a lot of companies here that could benefit from this.
Lowe's up 3% here on an upgrade from Barclays, Steve. Nice little move to the upside.
But I thought this whole war taking Venezuela was about he's a narco terrorist.
It is.
It's not about that. It's about oil.
He's such a cynic.
Me? Yeah. Sorry.
Joke.
Silver.
There's a bunch of interesting penny ones this morning, but the only one looking to break out is Lucy. Keeping an eye on Innovative Eyewear, Lucy, Lucy, up about 53%. Could be a runner today. 181. One to keep an eye on.
Yeah, I really like Netflix under 90. I mentioned that yesterday on the show. ASTS down about 7.5%, getting interesting to me. It's really trading hard here today.
Steve, I will continue to mention my SIDU that I brought up last Friday, up another 4% today, 520. If you got in with me, you're in at 350. Continue to move to the upside here, and this is one I am not looking to take any profit on. In fact, I was hoping it was going to pull back a little bit further yesterday. I wanted to buy more at 350. Pulled back. It did not get all the way there.
A 1 hour chart of Tesla is looking really good to me. to the upside.
$440 is the key resistance. Well, yeah, 440 is the key resistance. But it should range up towards that. You see Google catching up here, up another 1.5% here. So Google getting a little bit of love here this morning.
Yeah, there goes that. There she goes. Come on, baby. Now get back up there. Eli Lilly, that deal for biotech Ventex is interesting. They're going to pay $14 a share there on Eli Lilly. I do like that. That's a very interesting play for me. Eli Lilly is, take all that cash they got from all their weight loss drugs. They're spending it.
Yep. The problem there, I need them to split. I don't like stocks over $1,000. Yeah, 109.3. They need a 10-for-1 split, please. Well, because I can't feather in, feather out. I don't. It limits my ability, so to speak.
Yeah.
To trade it. I can invest in it. I just can't trade it.
European bond sales top 57 billion in record-breaking day. They're moving money out of their stocks and going on the bond market.
Proud taking off here, up 2.88%. It's going to come up on key resistance. It's all-time high, 1111.
And CNBC now talking about SanDisk here, so be careful out there on SanDisk.
Yeah, that continues just to have a strong move. Whoops, wrong thing there.
Q's pushing higher here now, 624.04 here. Bitcoin trying to make a move here.
Yeah, it held that key area, 91,150. I think was the low from, that was the low from Tuesday that I was gauging. So that's yesterday's low. So it held yesterday's low so far. So that's a good start. Now let's see if we can recover from there.
Good morning, guys. Everybody out there, say hello.
Hey, everybody. Do us a favor, hit the like, follow, share button. It does help us here for sure.
Hit the fear button,
The fear button. Ripple pulling back here. I do think it starts to get interesting on any kind of pullback towards $2.11 or so.
All right, Mr. Tesla, we liking you now. We liking you. Let's go. All those sellers are
starting to run a little bit here. Microsoft moving to the upside.
Oh, there's a breakout there on Tesla. 437 now, folks. 438 on tap. 438 now there, baby. Let's go.
Like I said, you got should range up to 440 there. That's where it's going to have to make a decision. That is your spot.
$438 broken up.
No real breakaways from the pre-market movers at all.
Bitcoin 92,000 again. Yeah.
Yeah. I do think Bitcoin rechallenges 94. If you take a look at your hourly chart there, it's right at the bottom of the linear regression right now. Nice bounce right at it. There, the keys breaking through 92,500.
Eli Lilly up 4% now. Whew. And
Yeah,
buying
that's one move.
a company. That's not normal.
MSTR taking off now, up 5.5%. Trying right here.
This is heavy sour food. It is expensive and difficult to refine. The idea and what we're talking about.
MSTR breaks 170. Look for an explosive upward movement from there.
I'm taking a little bit off of my Tesla here because that was the double down that I made yesterday at the bottom, and I took that off. So lower my temperature on the heat on that one, which is a nice little run here up. You know, let the rest run. Yeah, ASTS now 90 back to $90 here. So I thought that sell off there was a little much.
Yep.
I think that's the problem with the markets right now. It's over everything, overbuying, overselling. It's chasing on a level that I've not seen in a long time. I'll bring Steve also to ask that question when we've seen chasing like this.
UNH getting a hit here today a little bit, down about 1.5%. Meta getting hit here today.
In the marketplace. As you guys know, backed up stored oil is a fancy term for basically
Google up 2.2. It looks like it wants to be today's Amazon.
who's on the ground there that we're I just how does that actually get executed? So that was my first question to my sources that are close to the White House. I will say that I hate saying this, I'm not exactly sure because it's going to differ. For example, there will be times, as we saw today, where sanctioned oil tankers are boarded, taken control of, and rerouted.
Silver continuing to slide. Same thing with gold here. Bitcoin unable to stay above that 92 level, 91,830. Holding up okay, though. Advanced decline's gone negative on the day. VIX is just tethered to this $15 handle.
Yeah. I will say something very cool today. We will have a special guest on today, later today. I'm going to be interviewing a very special media person. Very special. You're going to be excited about this one. I'm not even going to tell you who it is, but we have a very large name today. I'll be interviewing them later today. Very, very large. So you'll be tune in later today to see what's going on.
Intel up 4.5% here today, Steve.
Submarines.
AMD continuing to slide here, down about 2.9%. Micron cooling off a little bit in the chip sector also.
Gold trying to push a bit here. A lot of call buying on ARM there.
MSTR up 5.32%.
Wall Street Jesus says that the put to call ratio on ARM is huge. Put that up.
Western Digital now down almost 9% here after the big run up yesterday.
At 11 a.m. today. I guess I just asked what time later today. 11 a.m. And a friend, by the way, I might add.
Google just continuing to run here. Chip sector definitely under pressure here. And we see technology, utilities, materials, industrials, and financials are the laggards today. The only sectors of the S&P that are positive, being led by healthcare, up 1.07%. Eli Lilly, like Steve said, a big part of that. Communication.
We are now hearing reports that a second oil tanker has now been seized.
Like I said, they need them to move that oil that they're going to get.
Trump just said the only nation that Russia and China fear and respect is the United States. Folks, that's war talk.
S&P, meanwhile, just hit another all-time high, 693.09. So S&P prints its second all-time high of the year. Not quite there on the Dow Jones, 69.91.50, 69.94, the all-time high there. Oh, excuse me, that is not correct. I was reading the wrong thing there. They did, excuse me, the Dow just did set a new all-time high at 49.876. I apologize. So Dow Jones and S&P both set an all-time high here in the trading session today. Bitcoin unable to hold 92. Silver unable to hold the 98 handle here. Gold's fallen back below 4,500. So we do see commodities cooling off. Gas down now. So now it is making sense, Steve. Gas is down about a 0.5 percentage point here for WTI. Only down 13 percentage points on Brent. So, and that would make sense, right? Not as much competition to that part of the world. Copper down about 3% on a little bit of holdback here.
Yeah, no, Steve's right. Money talks and showing confidence in pricing. People are voting with their wallets, but I think it's the K economy, right? I don't think it's anything more than that. Let's see if Tesla can bounce off this 436 handle here. It's there. It is now. If we can push up again. We could have a meeting of minds. Dr. Alan Ellman is sitting in the background there. Should we bring him in? Alan,
Sure.
give me the thumbs up. You good with this? You can't.
I guess so. We'll bring him in. How are we doing, Dr. Ellman? Great to see you. How's things in Florida, my friend?
75 and sunny.
You know, it seems like that's always the answer here as I'm in my sweatshirt all buttoned up to the top. So
That's why I'm here.
absolutely. Market's a little crazy here this morning. What are you thinking about this news here that you're hearing? Is it affecting how you're trading today?
Okay, I wasn't privy to what you were you discussing the
Venezuela.
the oil tanker?
Yeah.
Now, second one now.
Yeah, I'm extremely concerned about that, about Greenland, about Cuba, about Colombia. I'm very concerned about that. I've been taking defensive posture on my trades for most of 2025, and I continue to do so. And that means I do covered call writing and cash secured puts for those of you viewers not familiar with me. And you can actually craft your trades to be defensive and still generate income that beats the market. And that's what I've been doing. I beat the market by somewhere between 5 and 7% last year, and the market was up 16% or so. So yeah, I'm pleased, and that was taking defensive positions in the money call strikes and deep out of the money put strikes, and I'm going to continue to do that until we can figure out what the heck is going on here.
Yeah. Hey, let's bring in, we got Steve Flanagan here also.
Flanagan
We'll
in.
get everybody in today. Mr. Flanagan, how are you doing, my friend?
Doing well. Good morning, guys. And Alan, good to see you again.
Same here, Steve.
You know, all
Let's
you
get to it,
Florida
guys. I mean,
here.
we have the meeting of the minds here going on, and let's talk about it. I mean, Steve Flanagan, you think that the world's okay? You think that Trump taking over other countries is okay, right?
You know, Steve, I don't want to react to, am I concerned? Of course I'm concerned. But the level of my concern does not rise to a level that I need to respond to. You know, you've got to look at the bigger picture here. And simply said, there's been a $25 million bounty on this guy's head. So somebody went in and took him and took the bounty. What's the big deal? The fact that the United States is beginning to exercise its right around the world, or at least in our hemisphere, is certainly not something that, you know, is going to cause. I would never even come close to crossing a line of saying the drum beats of war are escalating. I would say actually completely the opposite.
Okay.
That not at all. In fact, the outcome, I would think, of this is what the markets are telling us, and that is, wow, a peaceful resolution is the best thing for an investing community. And I would just highlight one point. As of January 4th, Commerce Bank released the last 4 weeks that Russian oil revenue has plunged 10%. Now, that is the money they use to finance their war. And that's what this is really all about. The U.S. systematic increasing of sanctions and ratcheting up pressure. The Urals oil is trading at $35 or lower on the market. And that's a 60% decline since October 1st. So, yeah, this is choking off Russia and forcing an end to a horrific war in the Ukraine.
Steve, do you have any concerns that these decisions are being made not by Congress, but by the president? Would you feel better, in other words, if Congress got involved in these kind of decisions so it would actually reflect the will of the people?
Well,
one way or another.
I think it's a valid point. I think that, you know, I was a little concerned when the comment came out that we are advising Congress afterwards because of the leaking. I don't think that that's a statement that I worry about, but more a statement of fact. I think the president is executing powers that any other president has executed along the line. So I don't see it as a big break or something to be overly concerned.
Well, we have not ever seized an oil tanker from Russia.
It's a sanctioned oil tanker.
A U.S. sanctioned oil tanker, not a international body that sanctioned that. Not NATO, not UN. We sanctioned them. So
okay, Europe has too, Steve. We're trying to end the war. It is a sanctioned tanker. So it is not, yeah, it's the fact that we can do it. In the middle, 180 miles in the Atlantic Ocean, we can deploy and execute and take a tanker, which everybody wants us to be doing. That's why everybody's agreed to these sanctioned tankers. So I don't see it, you know, in the same light.
Okay.
I see it as an execution of a strategy to end the war.
And look, you're right in a lot of ways that the UK also got involved. That we use UK planes too as well, and helicopters to go after this ship. But I don't know. See, the drum beats of war seem to be hitting very hard. And I'm a former State Department employee, I'm a former White House employee, and I know I can smell, when I smell smoke, it's fire. And I will tell you, I have not seen this kind of talk in well, I guess since Operation Desert Shield.
Okay, I don't, Steve. I know you are extremely well connected, and
I don't mean that, but I mean you have to think about it from that perspective, Steve. You got to go. Okay, wait a minute. This is a sanctioned oil tanker. You're right, by a U.S. sanctioned oil tanker for under auspicious reasons. Because he said narco terrorism. He is not saying, well, he's a narco terrorist. I'm going to take him in and his wife. Right. The last time we did that, Corazon Aquino, we took in Manuel Noriega. This is serious.
Yeah.
Okay.
It's not. I'm not saying it's not a serious event, but I'm looking at it and saying I'm not going to react to the negative. The markets are not reacting. I watch price, and price is telling me that people are looking with confidence.
But that's the question I was asking earlier. I don't understand why. Why is it, obviously the oil market's obviously responding to 56, 52 a barrel now. But why are people not responding to this and selling their shares? And well, we are seeing that the largest buy purchase in UK and EU history has just happened today. So the European are getting nervous, but why are we not getting nervous?
Because this leads to peace. This is not leading to war. This leads to a better investing climate. I mean, let's face it. This was a 24-hour, if not less, incursion. Took a guy out of an army bunker. It broke all the Chinese, radars. In Iran. Iran had all the top Russian radar. Yeah. What are we afraid
of? Their military definitely is watching this, both of them.
Do you think this is a show of power? Because the Chinese have been having marches and all kinds of things, and Russia's been doing the same thing. And we know the Russian military is definitely not on the same power as it was because of the fight with Ukraine. They've lost lots of military members now. Wow. Okay, so you think is this part of the quantum convergence that you're talking about too as well?
Absolutely, Steve. And as far as the military watching, yes, they are. But let us put this in perspective, please. The great big bear of Russia, fear Russia, gets us to spend $1 trillion on our defense, and yet they are at a 2+ year war with the Ukraine, who has no military virtually at all. They can't win a war there. It's bogged down. So, I mean, what is the great concern here? What is happening as a result of Russia's moves and the threat of China is the militarization of Europe now. They're now going to spend 5% of GDP, which is going to be a great economic boom to Europe. You've got Japan now increasing defense spending to the third highest, if not second highest in the world. You've got deals with Taiwan, South Korea. You've got Australia involved buying submarines. So, the escalation that we've seen in the past from a Russia-China is having the adverse effect to them. And that's why the markets are looking at this, and I believe voting in a very confident manner and moving forward. If you look at the dollar index, we're gradually beginning to percolate back up here, because where are you going to put your money in a world that is excessively short of US dollars because of BRICS or because of the reserve currency baloney?
Hey, Steve, what is your opinion on how the market would react if we went into Greenland?
Well, I don't see us in Greenland. I think it's just, let's take Trump. He comes out with all the words, distracts the market, gets everybody to run out there going, we're going to war in Greenland. But meanwhile, the U.S. has a base in Greenland already. There's 35,000 people that occupy Greenland. There is a movement in Greenland to have a independence movement. It has to get voted on. It's a long, drawn-out process. What the idea here is that you'll see the U.S. and NATO quickly agree to establish more of a presence in Greenland, because it is all about where the military incursions in the Arctic are happening. And that will be the outcome of escalating. We're going to take over Greenland. The United States has no interest in taking over. What we have interest in is seeing a defensive posture put in Greenland to offset the Chinese and Russian incursions into the Arctic.
Yeah, I think that one of the issues is that a lot of people are concerned that this could exacerbate, and nobody knows for sure how our government is going to react because we're constantly being surprised. And the market has been incredibly resilient despite that, and hopefully that'll continue. But I just saw something from the White House this morning that they said they very well might go into Greenland. Now, that could be posturing, as you're suggesting, and hopefully that's the case. But can we actually say with 100% confidence that that actually is the case? Just posturing. I don't know. I am concerned, and I'll continue to be concerned until all this plays out.
Yeah, I mean, I would have full intention of, perhaps buying into some of the volatility indexes that are extremely low over the weekend as a defensive posture. But I would say my entire thesis is out the window if the United States were to invade Greenland. So I want to understand that. That's how little I think that is a possibility. But
I think you have to define. I think you have to define invade. I mean, does it invade mean we step on the foot because we're already there, right? I mean, the United States has rights to the Greenland, or does this mean military boots to the ground?
We already are there. So I would say if the United States were to land more troops without, talking to NATO. Not Denmark, NATO.
Okay.
I think that's where the whole discussion will come. I think NATO will increase a presence in Greenland.
But NATO's already said that they don't want us there.
Well, we're there already. NATO already has a presence.
I mean, like the invasion of boots on the ground, and it will be an act of war, and NATO will. I mean, NATO is built on when one country's attacked, will protect every country, right? That's what NATO was always built around.
We're not going to attack Greenland. I mean, come on, it's just preposterous to even begin to consider that into an.
Marco Rubio told the House Republicans that we are interested in buying Greenland. Who are we buying Greenland from?
Okay, that would be a long, multi-year process with Denmark, but it would have to be a precursor to the Greenland people voting for independence from Denmark. I don't see any of that being, I don't see any move on the United States part skirting the people of Denmark or of Greenland.
I mean, obviously, here on Quasar Slide, we've been talking about Epstein files forever. We're not talking about Epstein files anymore. Is this part of this whole deal?
Well, they've already been released, right?
No, only 1% of the files have been released.
Okay, well, has anything come out on the 1%?
Well, I don't think anybody cares anymore, right? It's all about what's going on now, right?
I'd say the bigger question is, how did the guy hang himself with a sheet in jail? Yeah, I mean, come on. Okay, that's a great offset, Steve. I don't disagree.
My point is this. I threw that in there, right, to throw all the world off balance. I think that Trump is throwing the world off balance because I think he has a bigger picture plan here, and I don't think we've seen it. That's when Howard asked me earlier what I thought. The problem is that we don't really know the bigger picture. This isn't just about Venezuela and a narco-terrorist. This is obviously we know it's about oil, but there's more to this, Steve. I think it's way, way bigger than this.
The bigger picture, Steve, is a quantum convergence. It is the United States leadership into a technology-inspired world that we are moving rapidly into. When you've got a Fed Reserve saying that they don't think, from what they hear, that AI is having much of an effect outside of big corporate America, it just shows you how out of touch your institutions are about where the United States is leading the world. And that's where I think it's going. And that is the master plan that I believe is being unhatched.
And Alan, how do how are you positioning your portfolio around this too? I mean, you teach covered calls. How are you positioning your portfolio?
Yeah, like I alluded to earlier, I've been taking about 75% of my positions, and I sell between 100, 150 contracts, options contracts every month. About 3/4 of them are defensive in nature. So when I'm selling a covered call, I'll sell an in-the-money covered call, which has an intrinsic value component, which lowers your break-even price point more than at the money or out of the money calls. As far as cash secured puts are concerned, typically, I will go slightly lower than current market value, which is out of the money for puts. But in the last 8 months or so, I've been going deep out of the money, so deep. So in other words, I'll purchase the shares at a much lower price than current market value. That's still allowing me to generate between 10 and 20% annually with all this protection to the downside. So my point is, I could take a defensive posture, which aligns with my concerns of the overall market, our overall economy, and so on and so forth, and still beat the market significantly as I have in 2025. And I'll continue to do that until some of these things crystallize.
I think that's an excellent, risk management strategy. Really,
We're now. Thank you so much for watching us. For those of you who don't know, Alan and Steve Flanagan and Howard and I have been friends for many, many years. So even though we disagree on policy, we are friends. And we want somebody to thank you so much because we're now 2,000 viewers right now. We're growing very fast here. Have now become the #1 watched show in finance now. I know other companies are saying, "Oh, we are," but we really are putting the numbers, and we really appreciate that. If you just do us a favor and hit the like button, subscribe, and obviously retweet and repost, we would appreciate that as well. Howard, look, the world also votes around the world, not just the stock market, but in crypto too. And what are we seeing with that?
Not much of a move, 91.6. So there's not really much of a reaction from the U.S. market into it right now. Then we're not seeing that movement in metals either, though. So we're not really seeing much go on. Gold's down 1.18, silver's down 4.79 today. So it hasn't been a run. It has not been a run to the exit, so to speak. The debasement trade is not really playing out. I'd have to ask Mr. Flanagan. DXY 98.55. Do we expect it to break through the 98.90 area that you've sort of highlighted as that upside breakout potential spot?
I think we're going to continue to meander on to that level. I am looking for topping somewhere around 98.80, 99.20 in this initial dollar movement up. We have great support zone right here at 98.28, which represents the 2025 close, and last week's close, the first day of trading, 98.43. So I've got a very minimal downside risk here of, say, 30 points where I would exit, but I am looking for this beginning move to crawl. I don't want it to be a sharp move, because if the dollar begins to move in a sharp manner to the upside, it will have a destabilizing effect on all the correlation trading that's beginning to establish early on in the new year.
Okay. And then my other question I have for you on that would affect all of us too, is you were watching the peso very closely with the pushback coming out of the president of Mexico. Are you seeing any movement there? And as we know, that's sort of taken over as the big carry trade, right? Is that carry trade starting to unwind?
Dollar MEX right now, 17.97. It's up again from last week's close of 17.90. It has been up as high as 18.02 in the last 24, 48 hours. I am long dollar MEX. I like that play. More so, I did hear Trump make a comment about Mexico and the cartels, but put that one aside. That is an element into my long dollar MEX, but more so because of the weakening of the Mexican economy. And I am expecting continued rate cuts within Mexico. They've, I think, cut now 12 successive times. Right. They are at 7%, and we are beginning to get to that point. If the currency begins to depreciate, meaning dollar rising, you're going to see a tremendous parking lot of money that's sitting in the Mexican peso begin to look to get out, and that's going to be a surge in the dollar mex relationship. Keep in mind, sometimes the Mexican peso can be the third largest traded currency in the global marketplace, and that's in a $9.4 trillion a day market.
Yeah, that's what I was wondering. And for you, Dr. Ellman, I have a question. Are you seeing since the first of the year any changes to those to the premiums for the higher out of the money put spreads? Has there been, we know there was a lot of profit taking going into the end of the year that was exasperating and giving more premiums to the downside, probably, if I had to guess. Are we seeing any changes after the first of the year?
Well, you had very low liquidity up until this week because everybody was away on vacation. So we're just beginning to reestablish the liquidity level. I would say if you look at the VIX, you can get an idea about the average premium from options, and it hasn't been that high. It's been modest.
It's only at 15. It's, if we consider 18 to be neutral, it's actually low. That's one of the things I don't fully figure out right now.
It is that, but you know what? It's perfect for option selling. It's perfect because you could still generate significant premium and not incur the risk to the downside. So, when the VIX is extremely high, even though the premiums are greater, the risk to the downside is greater, and I'm not happy. And I'll take a more defensive posture as a result of that. Howard, that's one of the biggest mistakes that option sellers make is they look for securities that generate the highest premiums because the ones with the highest premiums have the highest implied volatility and therefore the greatest risk to the downside. So where we're at now at 15 or 16, wherever we're at now, is perfect for option selling.
Awesome. Well, that's good to know. I'll have to make sure I'm adding that to the tools
VIX
I'm using right now.
or 16,
I'm actually in one on UNH right now, so I am using it on UNH currently. So we'll see what happens there.
Don't forget about IBIT.
That was going to be my next question. So what are you seeing? What are the options chain telling us there on IBIT? What are you seeing there?
Well, IBIT's implied volatility is a lot higher than the average in the stock market. So the premiums are going to be more generous. And if you wanted to take a defensive posture, as I said before, sell in the money calls, and you'll still be able to generate a significant amount of time value premium. If you want to do a put, which is a great way to enter a covered call trade by selling it out of the money put, and you want to have more protection, go deeper out of the money. You're going to get 10 to 20% annualized returns at either that, or you're going to buy the ETF at a discount. Those are the two outcomes if you sell a deep out of the money cash secured put on IBIT.
Absolutely. And I will tell everybody, make sure you look at our YouTube channel. We have a huge amount of information from Dr. Ellman and I, interviews, and one of them is specifically on using IBIT in this way. So definitely make sure you look at that.
So a senior Russian lawmaker now says the U.S. seizure of a Russian flagged oil tanker is outright piracy. I mean, the talk is getting higher and higher. I mean, it seems that the Russians don't seem happy about this.
I mean, was it a Russian tanker, or did they paint a flag on it? Was it flying a different flag when it got chased out of the Venezuelan waters?
But I don't think it matters, Steve. I mean, if you talk about it from the perspective, if the United States goes, that's a U.S. tanker, don't touch it, right? It doesn't matter if it's another country's tanker, right? In this case, what if it's a Venezuelan tanker, right? Which they do have tankers.
I don't disagree, Steve. They can say whatever they want, but it's a sanctioned tanker. It's coming out of Venezuela. It's been chased ever since the end of December, and it's been avoiding. I would say, according to the reports I read, it never made it to be filled.
It didn't make it to Venezuela, no.
The question then would be, what exactly was in the tanker, or what was it delivering to Venezuela then, or attempting to deliver? So, these are all things that, I don't look. You've got to have some sort of strategy right now. I think Dr. Allen has just, laid out a perfect strategy into being able to play a defensive role, but still reap the benefits of an upside play. And I think if you're a risk manager, if you're a trader or an investor, you've got to say the hyperbole out in the market is accelerating. I've got to do something. I'm not looking to say I'm sitting blind to this, but at the same time, I'm saying I'm watching the price, and the price is dictating my decision making, and the price is telling me that the markets are exhibiting more confidence in light of what we used to react to in a very negative fashion. So I'm trying to understand what's that difference. When I used to sit at a trading desk, these headlines, you'd be going, sell everything, because that's the knee-jerk reaction, and the markets aren't. So that's why I'm trying to understand what is the dynamic that's different here.
That's what I'm asking you. What is different? Why all of a sudden now is Trump going after them on the 2026 as opposed to 2025?
And that's why I'm trying to explain. The markets are showing confidence in what they're looking at as a horizon view.
I see.
And they're saying, by moving all of the negatives aside, I will actually be able to have a lot more confidence in my investing decisions across the world. And there is where I believe 2026 unfolds, this quantum convergence of all these technologies coming into place that begin to leave the investor in an incredible position.
The stock that really tells me whether or not how the country feels about the whole thing going on in the Caribbean is Royal Caribbean Lines itself, RCL. I mean, the stock's way up. I mean, people feel confident about cruising in an area that's being attacked by militaristic implications here.
I'm not worried about being boarded.
Right. It's true. I mean, I never have been. Everybody knows I cruise a lot, so it's like wow. I agree with that. The people are voting with their pocketbook, so I like that. We're almost at 3,000 viewers, folks. Thank you so much. We're gonna keep this going. Yeah, I love this.
I would just like to add one other element that has been a major topic, which now has drifted to below, and that is inflation, or where is it? The Eurozone CPI came out today at 0.2, now down to 2% from 2.1. You had Italy CPI now running at 1.2% on the year, and you had the French CPI, which now runs at 0.7% on the year. So you are quickly seeing Europe slip into where is inflation, and how can the ECB hold rates at 2% if there's no growth and no inflation? You've got the Asian situation. Australia, for the first time, November's CPI was 0, puts them on a year of 3.4, down from 3.8, and they're the only central bank where everybody's talking higher rates. So as inflation is disappearing on the landscape in global markets, that's another element that becomes a very good positive to the investing community throughout the world, that inflation has been beaten and that rates will continue to come down. Another positive once we can get through the headlines of today.
But I'm looking over here at the coffee prices. Coffee futures at near a 1-month high at $3 a pound. Food is not cheap still. People are still complaining about inflation. Going to restaurants has not come down in price. I don't know. I'll lean that on Howard there a little bit. But this is still a K economy. This is not a economy working for anybody. Right? It's only working for those of us sitting in the panel and listening in on investments. It's not working for the people that don't have this.
It's not working for restaurants. Restaurants are having their worst year, worse than COVID for most independent restaurants.
I don't deny the theory of a K economy at all. As I've said on the show, the U.S. must begin to focus on our domestic economy and pricing and affordability. And I believe that you've already seen outside of what's been just going on in Venezuela. You've been seeing a lot of discussion in that area by the U.S. Administration, Congress, and the Senate.
And folks, we just passed up Al Jazeera being watched now. We have more viewers now than Al Jazeera. We got more viewers now than Benzinga. We have more viewers now than the House Republicans now that they're having a conference right now. Because I think people really want to know about what's going on in the real world. They don't really want to hear it. They don't want to just hear talking heads. They want to hear people that's been there. So if anybody out there is watching us and you have a question, this is literally the meeting of the mind. We've got Dr. Alan Ellman, many years in options trading, and Steve Flanagan, the former head of JP Morgan's desk at Forex. I mean, this is a great meeting of the minds. And Howard Greenberg, obviously president of the ABCA at Prosper Trading, is too. Yeah, just came in here, Steve. Food is too high. So inflation's not in check, I don't think. Inflation in some things maybe, but inflation.
Well, gas is driving that. Gas is a big driver there right now. And so is housing.
Gas has come down quite a bit.
Steve, for every increase, there's an offsetting decrease.
Yeah.
So, I think if you look at the main driver of your inflation, it's oil. And, that is now beginning to show in pricing that these CPI numbers are picking up. And so the pressure is not up, it's down. And what do we do if inflation suddenly starts dropping? The knock-on effect here, these are the little positive percolate that are percolating under the surface here to the narrative out of Venezuela right now and the war. Everybody talking. And that's what the market's focusing, I believe, in my analysis on. You're going to have a debt to GDP ratio that's beginning to continue to decline. And that's an important factor. You have an inflation number that's showing. You have a Fed that I don't really think you're going to see more than maybe 2 cuts. I do not think January is a cut unless some numbers come out in this near term. Next 2 weeks that show a cratering economy. I think they can easily sit and wait for a meeting. And I think that also adds a lot of confidence that, well, I thought we were cutting rates because everything was going bad. Not at all. And, that's another positive, I believe, to the marketplace. And that's what they're voting with in maintaining these levels and adding to new highs in the Dow.
And Alan, do you imply or do you include inflation in your models when you look at options? Do you also include inflation as a factor?
I don't include inflation as a factor, but I have to tell you, Steve, that a lot of the comments I've been getting from my members as it relates to inflation is that they are turning to options to compensate for some of the higher prices that you've seen in the grocery stores.
Is that why we're seeing the market so high? Because they think this is where they can make the money up from all the pressures that we're seeing?
I'm beginning to think that there could be a relationship because I've had a lot of new members come aboard and tell me, prices are going up in the supermarkets and, whatever, that K-shaped economy Steve alluded to. And I'm thinking that maybe by selling options, I could make up for that because right now I'm struggling. My demographic are mainly retail investors, although I do have a lot of professionals that follow my work. So I'm beginning to think that maybe there is that relationship that will explain why there is so many concerns on the part of a lot of people, not everybody. And yet the market seems pretty resilient. Interesting, I thought.
That's very interesting. I think that's a good point there. Howard, are you seeing a lot of your traders also trying to trade more to pick up for the loss in inflation and that kind of situation?
I don't know. We have not really. I'm not seeing one way or the other on it. We have a pretty active trading crowd. Remember, this is more day trading than sort of investing, so it's a very active trading crowd.
I will say that I had several comments, texts from me yesterday that saying, "Hey, see, the market's run so far. Do we now take some profit off from this?" And yeah, I always take profit off, right? I mean, I think that's the key to what we do, right? But I also think that there is a malaise in the market that nobody seems concerned or worried right now.
When you're selling options, I can get back to my world.
Let's do that.
When you're selling options, even if there is a good part of the market that's not performing well, there are always those securities that are outperforming. And if you could locate those, then you could do very well, whether you're trading defensively or more aggressively. And that's one of the things I do. My portfolio turns over 20 to 80% every month, mainly because I avoid earnings reports. But so, if you have, let's say the market turned south a little bit, even in 2008, when things were awful, there still was some securities that were doing well. And those are the ones that I focused in on. I mean, I could have used inverse ETFs as well and done even better, but I was a little late in the game with that. But right now, today, if you can focus in on the best performing stocks and ETFs, because that's my world, stocks and ETFs, and sell options either in an aggressive or defensive posture. I'm leaning defensive. I'm here to tell you that you can outperform the market significantly, even in these trying circumstances.
Well, let's do that. We'll let Howard and Steve Flanagan go, and we'll go right into what you want to talk about.
You guys have a fantastic day. Thank you so much, everybody.
We will not end the stream here. We'll just go right on through, right? All right. So, Steve, yep. All right, guys. And I will also remove that. If you want, do me a favor, Alan, and send me the doc. I had your document. Is that correct? I believe.
Yeah.
Go ahead, and I will pull up that document as we speak. And tell me a little bit about what we're going to talk about today.
Okay. I just want to remind you, I have at 11 o'clock.
Great.
With the Options Industry Council. So I have to be out of here by 11. Talking about writing options on an existing portfolio where you want to generate income and avoid the sale of the shares using standard deviation as a metric to determine the outside range.
If you give me 1 second, I'll have it up here for everybody as I'm pulling it in now. Okay, and I will let you go. You can go talk about standard deviations.
Okay. All right. I'm bringing everybody back to their college days now. We're going to talk about standard deviations. If you have a stock that's a very high implied volatility stock, in our discussion just before, we talked about IBIT, which is an ETF, has a high implied volatility. In this presentation, I'm going to be talking about Intel, which also has a fairly high implied volatility. And we're going to be talking about if you have a portfolio of stocks that you already own in non-sheltered accounts, and you want to generate additional 4 to 15% a year over the, let's say, 8 to 10% you're already generating by selling covered calls, and you don't want your shares sold, then we could use implied volatility and standard deviation as a metric to determine what strike price we're going to be using in our covered call writing portfolios. So let's go to the next slide, Steve, where I'm going to talk to you about something called portfolio overwriting. Now, covered call writing is where you buy or own a stock and then sell an option agreeing to sell your shares at the strike price that we determine by the expiration date that we determine. And in traditional covered call writing, we don't care if those shares are in fact sold. We don't care, as long as we make our money. But with portfolio overwriting, it's different. We're adding in another metric, and that is we want to retain our shares. We don't want to lose them. Maybe it's because there'll be some negative capital gains issues. We don't want to have to pay taxes on it. So we want to retain the shares, but we do also want to leverage those shares to generate an additional 4 to 15% annually. Now, that means we're going to have to select the strike price, the price we're agreeing to sell our shares for, much, much, much higher than current market value. So what is that strike price? Which strike are we going to select? In this presentation, we're going to be using implied volatility and standard deviation to show you that it's so easy to select a strike price that's safe, and will actually measure the specific amount of risk of exercise. In other words, the price of that stock going from the low which it's at when you enter the trade to way, way higher than that out of the money strike that we selected. So let's move on now to a real life example with Intel. And I set this up on November 12th of 25 when Intel was trading at 37.85. So here's how you do it, folks. What you do is you go to the closest strike price to current market value, and that would be the $38 strike price. That had an implied volatility of 52%. Now, here's something that a lot of people that use implied volatility don't know. Many do, but some don't. Implied volatility stats are based on 1 year, not for a specific contract that we may be selling. And it also is based on one standard deviation. And that means the range we get from using implied volatility, it will fall into that range 68% of the time, right? So that means it will fall outside that range 32% of the time. So if we're writing a covered call on a stock that we own that we don't want sold, we're not worried about the 16% on the low side. We'll still retain our shares if the price drops to that area. But if it drops to the high end and passes the 16% on the high side to the right of a bell curve, which I'll show you in a moment, that's our risk. It would be 16% risk when we're calculating implied volatility based on one standard deviation. Now, BCI, my company, developed a spreadsheet that will make it so incredibly easy for you to generate a trading range based on implied volatility for both 1 and 2 standard deviations. 2 standard deviations will represent a risk of only 2.5%, which you'll see in a moment. And I'll show you that spreadsheet coming right up. And that will tell us, based on the implied volatility of a near the money strike, what that trading range is expected to be based on 1 standard deviation. And then we could take it to the next level and go to 2 standard deviations simply by doubling the amount calculated for 1 standard deviation. Okay, Steve, let's move on to the next slide, which is an option chain for Intel on that date, November 12th, 25. And it showed you that for the 38 strike, remember in the pink area, that's the closest to the current market value of 37.85. And if you look under the implied volatility column, you'll see that it is in fact 52%. Now let's move on to the expected price movement calculator that I alluded to before in the next slide. And here's all you have to do. Steve, let's move on to the next slide, please. There you go. Okay, so all you have to do, look how easy this is, folks. Just enter into the white cells the following data. Ticker symbol, INTC. Date of calculation, November 12th. Expiration date of the contract, December 19th. Current price of the stock, 37.85. And you enter in that 52% implied volatility. That's all you have to do. The spreadsheet will then give you the following information. If taken through contract expiration, it's a 38-day trade. Now, the amount of price movement based on 1 standard deviation, up or down, is $6.35. Now, remember, we're only worried about the high end. We don't want the price of the stock to go higher than the high end strike, which would bring us to a strike price of $44. That's $6.35 approximately above the current market value of $37.85. Now, what if we wanted to take even less risk and go 2 standard deviations? All you have to do is double that 635 and go to 1270. Well, 1270 above the 37.85 strike brings you to about a $50 strike price. So for 2 standard deviations, you would go to a $50 strike price. Now let's go into the weeds a little bit. Hope you don't mind this, Steve, and your viewers too. But I want to show you in the next slide the standard deviation bell curve, so some of this graphically can come to life. The 1 standard deviation represented by the purple field in the middle, that's 68%. So again, that led us to the 44 strike. Now, if we want to take that out to the 2 standard deviations, I circled in red in the middle, that would be 95%. Two standard deviations, by definition, 95% will fall into that range. And that would be represented by both the purple and the green fields. Now, we're not worried about the left side. We're concerned about the right side. So the risk with two standard deviations is only 2.5%. So 97.5% of the time, if we enter a trade based on two standard deviations, we will not have to take any exit strategy action to buy back the option so that we could retain the shares. And so this graphically shows you the difference between one and two standard deviations. Now let's go to the next slide and start to make some money here, Steve. The $50 strike based on the option chain that particular day, November 12th, had a premium of 46 cents for the 12/19 38-day trade. That resulted, again, this is over and above the normal amount of appreciation you've been generating in your portfolio. An additional return of 1.22%, which based on a 38-day trade annualizes out to 11.5%. Remember, I said between 4 and 15% would be our target. And that would be based on two standard deviations, which would be much more premium if we went with one. How much risk are you willing to take? 16% or 2.5%? So the upside potential, because the strike is so much higher than the current market value, you can actually have an opportunity to allow the growth of Intel price appreciation another 32.1%. And that's by using the two standard deviation strike. Now let's go to the next slide, Steve, and actually show you the BCI trade management calculator, where not only did I show, it might be a little hard to read, so I'll actually give you the stats as I'm going through it. So the $50 strike I just told your viewers represented a 1.22% initial return, 11.67% annualized, with an opportunity for another 32.1% in share appreciation. Steve, what if we go even higher? What if we go to the 55 strike? Well, the 55 strike generated a 38-day return of 0.82%, annualizing out to 7.87%. Again, over and above the 8 to 10% we're already getting. Can we make any money going even deeper out of the money with the 60 strike? Well, you tell me. That was a premium of 24 cents, representing a return of 0.63%, 6.09% annualized. And now we have an opportunity for an additional 58.52% in share appreciation. So you can actually enter the information into the spreadsheet, see what the return is, see how much additional upside potential you have. And as you go deeper and deeper out of the money, you're incurring less and less risk of exercise. Remember, the 50 strike had a risk of exercise of 2.5%. So the 55 and 60 go even way lower than that. So if we can just go to the last slide now, Steve, the takeaway from this, I hope, what I was hoping to accomplish was to show your viewers, Quasar viewers, that you can use portfolio overriding on shares that you already own, that you want to retain. Perhaps they're in non-sheltered accounts. You don't want to incur any capital gains issues. You could use up to two standard deviation strike prices, which are ultra low risk and generate between 4 and 15% additional annualized returns over and above the returns you're already receiving. And you could base this on what your time value return goal range is, and that will differ from investor to investor, as well as the personal risk tolerance that you're willing to incur. Steve, that's it on my side.
Wow, that was awesome, Alan. And I think that people need to understand how to get a hold of you. That's the Blue Collar Investor. We'll bring that up for you, everybody here. But wow, tell everybody, Alan, how they can get to know you and how to get in touch with you, man.
Sure. Well, my website is thebluecollarinvestor.com. My email is Alan, ALAN, at thebluecollarinvestor.com. If you go to my website, we also have free training resources for those of you who are new to options, you want to kind of learn a little bit more about it, just click on that free resources link. We have 8-part videos on covered calls, another 8-part video on cash secured puts, and shoot me an email if you have any questions. I always answer every single email.
Well, I appreciate that, Ellen. You know, I've known you forever, and we want to thank all the 5,000 viewers that are watching right now. I just want to say thank you very much. We appreciate that, as Quasar Markets is growing very fast. And we'll see you right back here. I've got a special guest at 11 a.m. here in about 15 minutes, folks. A special person you know. You're going to be excited. We'll see you right back here in a few minutes.
Take care.